Hello traders, hello everyone. Welcome to our new Elliott Wave webinar. It's Monday, 1st of July. So some of you are maybe already watching this from vacation. Some of you are still going to leave for vacation in the next 2 months or so. I was actually camping with my son for the last 3 days. We visited Lake Bohinj. So if you are ever in Slovenia, make sure to visit this place. It's really awesome. Um, I'm actually streaming this from my home office. So if there will be any kind of issues, please let me know in the chat here on YouTube. I prefer YouTube, okay, because I have my eye on YouTube chats the most. But we are obviously also streaming this to different platforms like Twitter and even Facebook. Okay, so if you will have any kind of suggestions, anything on below that video, you can leave me some kind of comments or whatever. Okay. Um, okay, so let me just bring my notes on. So we are, as you know, in a pretty slow trading environment for the last few weeks. It's normal, and I have been warning about this because that's usually going on during the summer. Okay, so when you have very slow trading conditions, but still we got some reversals at the end of last week. I think that was mostly due to book adjustments for the end of the month and end of the quarter, and also, as you know, because it's the start of a summer, so it can be a very slow market. Also, there won't be any kind of a major central bank decisions from big banks, and that's one of the reasons why maybe market could make a bit of a pause here. Now, if we look at the calendar, what we have for this week, European CPI inflation data first release is going to be tomorrow. Then we have Lagarde also speaks today, and also at 9 p.m. Well, that's exactly when Portugal Slovenia will play match for Euro 2024. So I'm not sure if I will have time to listen to her, but she will be again on the schedule tomorrow. Today also US manufacturing PMI data. I think that's going to be released in an hour or so. Tomorrow, no, on Tuesday, yes, Tuesday, Powell, Fed minutes on Wednesday. So we have some data that could move the markets at least in the first part of the week, but then you have US independence on Thursday. So this slow Thursday could also even expand into Friday. So maybe second part of the week could be a bit slower. Now, regarding US dollar, we have seen some reversal to the downside. We've been tracking this wedge going into the 78.6%. So we have seen some sell-off, but because of the time where we are, I'm just not really convinced if we'll see any kind of a real impulsive moves in or breakouts. Keep in mind that we are still trapped in these ranges. Even if you want to turn bullish, you still have the resistance line here that is still in place from October of 2023 highs. So in my opinion, even bullish triangle still should see this wave E pullback. So I think that at least in the short term, there can be some more dollar weakness, but I'm not really convinced if this will be the important breakout. Okay, so just keep in mind that there can be slow dollar going into this summer. Also, regarding dollar, even if it's coming to the downside since Friday, as you can see, actually I will open this chart. As you can see here, well, keep in mind that the US yields are actually rising, right? So I think that dollar will have a very hard time breaking some supports, let's say below 105. I just don't believe that these correlations can stay so negative for long. So I just think that you should be very careful here and just maybe patient till correlations are back to normal. But overall, if you just review maybe the higher time frame charts for the dollar, I still think that the later this year we could see more dollar weakness after this wave B correction is finished. But unfortunately, we don't have this price action yet to say that this correction is over. Looking at US yields, we are seeing some deep, sorry, these are notes. We are seeing some deep pullback here, but still all fine. I mean, it can be a leading diagonal here from that April lows. So this correction is normal and it's coming into this 109 support. Now, whenever you have a leading diagonal, there can be a retracement to the wave 2 rather than only to wave 4, okay? Swing zone. So in such case, it means that there is still plenty of room for this correction to unfold, and maybe we'll get some stabilization still sometime this year. But overall, I just think that this first very strong rise from October lows is an impulse, and this was the counter trend movement, and that sooner or later the next leg could be to the upside, but maybe we will have to wait a little bit longer before this may really come true here. Now, regarding euro, as you know, last time I showed you two interpretations. So maybe we are just in a wave D. We will see a retest of the upper side of this very big 12-month range. Or maybe we have a bearish triangle, but even this one is missing this wave E. So again, similar like with dollar index, as said, I'm not really convinced we'll see any kind of a real breakout just yet, but at least in the short term, maybe there can be some dollar weakness. Now, this dollar weakness maybe could come from the euro data. We will see maybe again tomorrow CPI from the Eurozone will get very hot. Maybe ECB will have to make a step back. Keep in mind that they are somehow dovish, but we already had in latest reports from Canada and Australia showing us that inflation is ticking higher. So if again this will be a similar story now in Europe, then I'm afraid that euro will see some strength here going into this week. But again, maybe just temporary strength. Look, if you look maybe a little bit closely here on the 4-hour time frame, not really. I don't really like this labeling with the triangle here at the end. But still, we had some push through potential resistance levels. But what concerns me regarding the near-term bullish view is that you have this Sunday gap open. And these Sunday gaps will very rarely remain open. So maybe just be aware that there can be another pushback towards 107.20 or so before market may finally see a new leg to the upside. As I said, maybe this will be tomorrow after European CPI data, or maybe even after Wednesday when we have these Fed minutes. But I'm not really convinced if we'll get any kind of a new material from the Fed minutes release. Now, looking at dollar yen keeps moving higher, and it's interesting that is actually showing some strength here despite the replacement of Masato Kanda, who initiated significant yen interventions, but looks like that this was only just temporary impact, and that Ministry of Finance obviously wants that the Japanese yen will show strength that will reverse the trend and not only have some temporary reactions, which are very common whenever there are interventions. So for dollar yen to finally come to the downside and Japanese yen strength, what we should see is very hawkish Bank of Japan interventions, and at the same time there should be lower US yields specifically based on dovish Fed. So if this dovish Fed and hawkish Bank of Japan could really show up here in, let's say, in the next 6 months or so, then we may see some serious reversal here on dollar yen. But for now, you can see that pair is still moving to the upside. In fact, I have labeled here the previous 2024 highs, which was around 160.22, and it acted as a support twice. Okay, so this means that clearly the bulls are still here. We cannot fall back below the previous highs, and whenever that's the case, it means that we are most likely resuming higher. And what I see now is still ongoing 5-wave rise that can even take us towards 162, maybe even 162.50. And since I mentioned earlier, we have higher US yields since last week. And if you look here closely, you can see that US yields here in blue found the bottom at the same time when dollar yen also tested this 2024 swing high as a support. Okay, so now as long US yields are coming to the upside, dollar yen can stay up. We need these whole cycles and different segment of the markets to shift around before dollar yen may also finally put in a top. But I know that there is a plenty of risk on the table. Even if I see some kind of a bullish counts, we've been tracking and turned bullish intraday after we have seen this push towards 160 1-2 weeks back. But I just think that there is a lot of risk still looking for potential longs here on dollar yen, because you never know when Japan will intervene, or maybe they will not even intervene on their own. If there would be help from other countries, then this intervention can be even more significant. Now, let's take a look on cable. As you know, there are elections, I think this week on Thursday. So pound, again, can be a bit choppy. And basically, the wave structure also does not show me that we are ready to resume higher. I know that we have some wedge here. Now, if you love the basic technical analysis, then maybe some would say that we are going to break higher. But whenever you have wedge forming or occurring in the first leg from the highs, then normally this wedge is just temporary. It will cause just temporary bullish reaction because it represents first leg within a deeper correction. So I think that it's wave A, that now when we are during this election period in the UK, we could consolidate for a wave B. Market could be trading on both sides, and then you see a real movement to the downside for wave C to complete the whole correction. Ideally somewhere around 1 to 510, maybe 1 to 550 could be the first upper zone of this upper level of this super zone. But then eventually at some point I would be looking for pound strength, as long we are here holding above April 2024 lows. So as long these lows are in place, I think that this consolidation is going to be part of a bullish trend. But of course, consolidation can be a bit deeper. Okay. Now let's take a look on Aussie. So firstly, Aussie last week found some support. It rallied, but it didn't broke out here on June 26 when we got strong hot CPI data from Australia. But still, looking at this pattern looks corrective, right? You have a very long range here, just moving sideways rather than to the downside. So again, looking or making one step back, you can see that previously we had a pretty strong move to the upside. So I think that this the movement has been much stronger, okay, and much more directional compared to the current price action. So I think that next leg is going to be to the upside. And maybe if dollar index would really come to the downside deeper from that wedge that we talked about earlier, then I think that commodity currencies can still do well this week. Even if stocks could maybe just move sideways, I think that at some point commodity currencies could do well. Even not only Aussie, but you can see that Kiwi is also having a pretty nice wave structure here, maybe even clearer compared to Aussie. You can see that we have 5 waves up from that April lows, okay, without overlaps here in the middle. So in the middle, you actually had a very strong extended lag, which in Elliott wave terminology typically represents, or it occurs typically in the middle of a 5-wave movement. So I think that now when we are this in pullback, it's a temporary contracted movement. It's an ABC, very nice support. Maybe the first one already been touched. It's 60.50, but deeper one, maybe even stronger one, could be around 0.6 psychological level. It's also the 61.8%, and it's also the measurement of wave C, okay, compared to wave A from a wave B from termination point of wave B. So this area down here is actually very very nice for potential bounce here. So Kiwi, Aussie, I think that this one has pretty good solid wave structure. Now here is also gold. Now gold is moving sideways. I have two wave counts on my radar screen. Okay, I'm not sure if I showed this one last time, but the first one and the primary one shows that we are in a triangle that will take us still back to 250, 240 area. That's the ideal support. Also, I'm pretty sure that a lot of traders have stops here below 2277 or so, which was the swing low from start of May. So back then, as you know, silver, gold, everything moved significantly to the upside. There must have been a lot of inflows. Everyone started calling some massive targets on silver, on gold, and what market does, it moves oppositely. Okay, so what should happen in the next few weeks maybe is plenty of liquidations, and then market will try to get rid of weak hands, and then finally we may stabilize. And this particular reversal occurred, as you know, after China announced that they didn't buy any gold in May, okay, after they have been buying constantly for the last several months. But I still think that they at some point will resume buying, and whenever they will announce this, I just think that metal could do very well, and possibly, I mean, now they have much better prices compared to back in May when we were trading at all-time highs. So at this discount, maybe this buying from China will resume, and this will have a positive impact also on traders' decisions, I think, as well. Okay, so regarding the wave count itself here on gold. So here is an ABCDE triangle. Now, this, as I said, could be potentially part of a bearish, still ongoing deeper wave for correction. But what I like so far is that this move from this lower side of this potential range is quite sharp, and it's in 5 waves. If you look or make your own analysis on a smaller time frame, you will actually see that this bounce from that Wednesday low last week has been made by 5 waves. So I think that there can be even a retest of the upper side of this triangle range at 2350. That would be my minimum upside objective, let's say, for the next few days, as long the market is holding this 2290 support. And why I'm highlighting this, or why I'm even bringing this on, is because I have another interpretation here, okay, which shows that maybe that's even a bullish running triangle here in a wave 4, okay? So that's also a valid formation, and normally the end of a triangle or end of a wave E will be the decision that the wave E has been coming to an end is whenever you have 5 waves up from the wave E low. So based on this interpretation, well, this is much more, this one has a much more um, uh, bullish targets, obviously, if we start breaking out. But even this one obviously suggests that then we should hold above 2290. So based on two interpretations, that's why I'm looking for 2340, 2350 maybe for this week. And then let's see if the market breaks out. Fine, can be looking for discount and start tracking, maybe even observing some much higher targets. But if this resistance at 2340, 2350 will hold, then and we turn back towards 2300, then unfortunately we will start looking for 2250 still to be a major support. But overall, this was more like a short-term view, but overall I still think that gold at some point will complete this correction and will resume higher. Also silver here, it's unchanged actually from last time, but we are at the potential supports. Now this maybe is not the best presentation or visualization of the very important support, but if you will maybe sometimes help yourself with this approach, okay, you can actually see, okay, that this is a pretty nice level here based on a closing basis. Okay, so I think that we can be looking and can be approaching to some very important levels from where market may resume higher. And clearly, if you will look on a smaller time frame, I mean, this retracement, you can already see here on the daily chart, it has a plenty of overlaps. And whenever that's the case, well, usually this is the most important white line, that this is a correction, okay? Because you will have plenty of issues trying to count this as an impulse. Maybe in some cases, these overlaps are allowed because of a leading diagonal, which can also occur at the start point of a new trend, but these are much less common, okay? And you always want to label the wave count within direction of a trend if the rules allows you to label that way. Okay, now some stock indexes. Firstly, maybe NASDAQ 100 and Dow. You can still see the Dow is in consolidation. I'm not really sure if this one is ready to break higher just yet. Maybe this consolidation will be even longer in time because we still don't have this all needed 5 subwaves. We are missing wave E, and even just consider that the first drop from the highs has been very sharp. So possibly even lower retest of the supports around 37,000 or 38,000 can still be retested, okay? Because this can be first leg of a deeper correction. And why I'm saying that maybe this one is not ready to break higher just yet, because if we are at the late stages here of this 5-wave cycle here on NASDAQ 100, which by the way is testing the upper side of this, here it is, of this impulse channel, then obviously we should see this wave 4 pullback. And then if NASDAQ 100 would come to the downside during summer, I'm not saying from this just recent swing high, could see another minor high and then a reversal lower. But if we'll see a consolidation through summer, then of course this will be also visible through other markets. Now, if you look, I clicked here. If you look here on the S&P 500, also we are at 161.8% extension of this wave 4, so pretty significant level up here. Also, VIX is trading at very low levels here. So again, just be aware that we can be moving into some extreme here. Here also volatility is very low, and whenever volatility and momentum is very low at the top of this bull trend, well, this volatility at some point will pick up. And whenever that occurs, I'm just afraid that this volatility will be very strong and could actually be driving the markets in the opposite direction. Because if the stock prices are high and you see some negative news, suddenly market comes to the downside, let's say 1% in a day, there will be a lot of liquidations. Everyone will be looking for a top, and this may then cause even deeper, stronger sell-off. Even if you look at German DAX here, maybe a 4-hour time frame, you can see here that we are not actually moving anywhere. Okay, we're just consolidating. So we can either be forming this deeper wave 4 that will be structured by 7 swings, so very nice, very strong support would be at 17,800, or maybe the whole pattern could actually be an ABCDE running triangle. Okay, let me just show you this idea, ABCDE. Let me just switch this to black. Okay, so this is also very possible and valid interpretation, but still it's bullish triangle, meaning it's part of an uptrend. And I think that DAX at some point will resume higher, because this drop from this, so far, this structure from the most recent highs in May is not impulsive. Okay, it already has an overlapping structure. So I think that maybe after a few more weeks of consolidation, I think that again DAX will be headed to the upside. But as I said earlier, so far this rise from the most recent swing low is not really looking impulsive. So that's why I'm afraid that maybe this consolidation is not over yet. Okay, now if you have any questions, anything, let me know. By the way, if you love the analysis, make sure to visit our website, wavetraders.com. Check out for trial offers for new members. Also, we have not only that we have these services, we also have Elliott Wave educational material as well. So if you are interested to learn more in deep the Elliott Wave principle. Okay, now, and last time I have seen some new subscribers on our YouTube channel. So if you are new to this channel, make sure that you also subscribe and be notified whenever we are going to release new material here on YouTube. Okay, now some stocks. I have a list here for Amazon, Nvidia, Tesla, AMD. Okay, so firstly, maybe Amazon. Last time that when we covered it, we said more upside should be here, should be seen because we were seeing consolidation near all-time highs. And whenever you see push to new all-time highs and then market is just consolidating around these levels rather than completely erasing the previous gains, well, normally around these important levels, then you will see some kind of a consolidation that sooner or later will take us higher. So market has been consolidating for a few weeks before it broke higher, and now there will be a lot of inflows that will try to ride this trend. And unfortunately, this kind of a potential optimism could really form a top here because we are seeing market moving out of a triangle, out of an ABCDE pattern. So we are here in a fifth wave, and I'm afraid that there will be a new correction, new reversal in the next few weeks because even moves out of triangle are final within a higher degree sequence. In our case, within a higher degree of wave 3. Also, if we look maybe at, I have here AMD, let me check. Last time when we had a webinar, we said that there is room for more upside on this one. Right, because we had these 5 waves up from May lows. So now we are just moving sideways here. So I still think that there can be room for 180 as long as we are trading here above 141. But up there, just watch or observe potential resistance levels because drop from that March highs is looking pretty impulsive rather than corrective. So even if we see a bounce, be aware that there can be limited upside. Also, we have seen some push to the upside recently on Tesla. Now, this occurred after ABC pullback here. So 167 was some very nice support, and now we are flying higher. Now, if we really are here in this bullish sequence, at least short term, then as you know, this current rise should unfold in 5 waves. So there's still plenty of upside potential here as long as we are holding this 167. So here maybe there can be even room for 220, maybe even 240, and this level or zone is also important because if you look here on a daily chart where we are tracking a potential very big ABCDE triangle, well, that's the area around 220, 240, where we have this trend line coming down from 2021 highs. So maybe that's going to be the next level. But here is also, I can see right now, there is some resistance. It was a gap here from earnings back in January of this year. So we'll see if we can pass this one. Certainly in the short term, there can be some intraday setback first before breaking higher towards these targets. Now, Nvidia, it didn't change much since last time. We are here actually still tracking this post-earnings cycle when strong earnings caused that market rallied for 2 weeks or so because there was plenty of optimism around this. As you know, this has a very positive impact. Those earnings back in February and May had very positive impact on other major stocks as well. So we have seen some push to the upside, but then at some point, market will slow down, it will make a pullback, and it came back to this earnings release date. Actually, it was a day later when we got this open gap. So I'm just wondering if maybe we can see some similar price pattern now. I would not be surprised because I'm also tracking the Elliott wave patterns, which shows the same idea. So we have 5 waves up, potentially completed, because market made a very strong reversal here 2 weeks back. So I think that's the first leg of a deeper correction, and I'm afraid that this wave C will still show up. And then let's see what happens again at these potential supports around 100, which is also close to these previous highs. And that's also the gap from the recent earnings release date. Okay, so this is pretty significant. Now, if someone wants to maybe gamble on the short side, you exactly should know where is the risk. If someone wants to be long, you exactly know where is the potential support. And definitely whenever I want to be long any kind of a market, I firstly want to see free wave structure. Never buy the first dip, wait on a deeper correction first. Now, Bitcoin. Last time we talked about these summer ranges. I'm afraid that maybe something similar could be again happening for this year, but it's good because then we can, in September, October, November, we can expect some very strong major breakouts with volatile moves. Also, this should be during the election period where maybe in the US will do everything so that markets will stay in good shape. And that's why I think that this could be the perfect timing for these cryptocurrencies to continue to the upside. And if you look closely here, I just don't think that this correction is over yet. It could transform into a triangle. Maybe even we can still retest 55 or 50,000 for this wave 4, but this would not be any kind of a big change regarding the longer term view, which in my opinion is still shows still incomplete 5-wave cycle up from that December lows. So big levels yet to be tested at new highs. But whenever fifth wave will show up, that's when you should be aware of some bigger consolidation, some bigger reversals. But so far at this stage, still looks like a very nice and solid consolidation here. As I said, could be deeper ABC for wave 4 towards 55 or 50,000, or if we see a bounce, if dollar, let's say, dollar index will continue to the downside this week, this could be supportive for Bitcoin in the short term, and maybe this one, if we see, let's say, 66,000 or so, then maybe this one could really transform and become a triangle here. Ethereum also, it does very well, especially after this ETF announcement, and I still think that there's a plenty of room for more upside. Same idea like with Bitcoin, if market will just move sideways rather than breaking on one of the sides here, then maybe even triangle is one of the options here, but still part of an uptrend. Okay. And finally, maybe this one is quite interesting. If this whole crypto market will continue to the upside, I would watch Solana. But I think that I would be waiting 100 to be a major support, or 110, because the first drop here or reversal from the highs can actually be counted in 5 waves. So I'm afraid that maybe wave 4 can be a bit deeper, and this 110 actually, which is still hasn't been tested yet. We came to 120 back here at the May 1st. That's actually the measurement of wave 4 compared to wave 1. So maybe that's still going to be seen here. But if we'll just stay chopping around here for the next few weeks, then maybe even whole triangle, whole wave 4 can still be a triangle, but that would not be my preferred idea because of the structure that we are seeing it in the first leg here. But after lower support levels, I still think that this coin has a chance to move to all-time highs. Okay, traders, thank you very much for your attention. Thank you everyone to watching. Please press a like, give us a comment. If you are watching this recording later, whatever, you can share it with your friends, and I will be happy to see you again next Monday. Okay, traders, good luck this week, and I will talk to you soon. Bye.